Have you ever felt that regardless of your actions, the market perpetually opposes your moves? That irritating sensation when you enter a trade and it immediately turns against you, doing the opposite of what you expected. The major players, Wall Street titans, banks, and billion-dollar funds are engaging in a vastly different game than most individual traders can fathom. They lay traps.
Think.
They strategically determine the price levels in order to entice you and countless other enthusiasts into the purchase trap. From NVI price finds the calluses your stop loss. This is called liquidity capture. Today I will show you how they do it. More than that, I will teach you advanced techniques for you to recognize the manipulated movements. And instead of being a victim of this game, you will learn to profit from it. Yes, you can use the same traps they create in your favor. In this video, you will discover the secrets of the big players. I'm going to show you how market manipulation really works. Why is manipulation so healthy? And why do most traders fail when trying to fight this tide? But you're about to turn the key. Are you ready to see the market in a completely new way? So stick with me, because what I'm going to show you, which you're going to learn by the end of this video, is going to completely change the game of the financial market for you. Oh my darling, well my darling, let's then understand first of all the price structure, and we end up doing this price analysis of the price structure and a larger graph. On the 4-hour chart exactly, we open a 4-hour chart and make some top markings, bottom markings to reference us and know where it's cheap, where it's expensive, marking all the 4-hour regions. We are going to mark the 60 minutes region too, because it is very important. That is, we have one more one, which had gone unnoticed here at the same level as the other. This is called EQH in the SMCE analysis, which high, that is level tops. We have another top back there, but we are not going to mark it anymore. So the price does the prank where the big players use one of the ones for you to believe that it is a good point to buy. So what is this first phase here? The industry. Man, induction, price induction, they utilize these funds so that when the price goes back in these funds, you understand that you have to buy, of course. Now we go to a 15-minute chart. Where can we identify this more clearly? So from now on, you will no longer buy bottom, never buy bottom again. As I said, they create these funds only to induce, which ends up happening beneath these funds. It starts to create liquidity, a lot of liquidity, because we have to understand the following scenario. Who bought here? Who bought here? Where is the stop loss? Who bought it here? The stop loss is here. And the more technical down there, look where the big players come from. To capture liquidity from today, I'm going to teach you this technique, which is called induction tops and bottoms. Where are you going to notice in a range at that price level when you identify a range? In this case, that's the leg we're considering. We have the extreme regions, the religions of external liquidity, as I always talk about. So within these regions, there will be the internal liquidity regions, and they are places where players will use to manipulate the market, a possible price return in that region, and are the tops and bottoms of are this top here in esteem. Certainly the big players will later use it to attract a lot of people to sell. And what do? I draw the line, put it there thinner, because this is the top line of induction. What is induction? It is to induce someone to sell at that price level, to position the stop loss there. Whoever sells here puts the stop loss there. What do the big players most want to capture liquidity? It exists above. There will be liquidity above these tops. That is, what will the big players do? They will execute the sell orders, and it will throw the market up, capturing all the liquidity in the market. It is at these points that we need to be attentive, making volume filters. As I use here below, I use Waze Wave and also Axifria balance of power to be referencing me. After that happens, there is this induction, because they use these same tops forward as a possible price stop. They are the ones who build these price levels, this chart design, to then use this same design in a possible return later to induce a lot of people to sell here, which ends up making many mistakes selling here. But it's not there that it's to sell and will sell above. When you realize that the big player has captured liquidity, then you start making filters with volume. You will understand there is no buyer volume yet, you will not sell, but the volume has fallen. There is the buyer volume divergence. Because the price is going up, 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 and up without volume, you already know that you should look for a reason to sell along with the big players. Similarly, from this moment here, or graph, we see this also one of induction. Before we were at the top of induction, this is a technique that took me over 6 years to develop. And understand that it is not in this type of scenario that I have to buy less here. Because here the market will not actually move, the market will not accelerate that much. I want acceleration. Acceleration puts something on the head. It only comes from the moment that the big players capture the existing liquidity. In other words, there is a lot of liquidity underneath these funds. Underneath these funds is liquidity. What the player comes, does, captures. Throw the market up, and this you will see repeatedly in the market, or make a drawing here now demonstrating more didactically how this setup works. We're going to have markets developing here up, coming down, up, down, and here he's going to create a bottom. He's created a beautiful bottom. Now he's created a top, right? What happens? We have the external liquidity regions, which are the extremes, the main top, and the main bottom. This is our reference to be operating from that moment on. How am I going to operate? A moment that I identify this fund higher than my fund and the liquidity region of the extreme, I already know that here the players will at some point stop. They will carry out the first phase of market manipulation. They will push the price down. For what? Because who bought a lot? Who bought a lot at this price level? Where did you put the stop loss? Or below the bottom, or the more technical bottom, which is this one right here. What do the big players know? They know this is going to happen. From this point, when there is liquidity capture, we will find a reason to buy, and buy heavy, 11 top short and a long target. That's the balcony. That's what makes you consistent in the market. Okay, Chris, and now what do you do up there when the price rises there? Let's set an example at that top 2. So let's say that price came, did all this here that I talked about and so on, and it's going to start going up there. You're going to sell at this top here. So this top is the top of induction. It's the top that will lead a lot of people into error. You're not going to sell here. You're going to expect a lot of people to sell here, and of course upstairs there will be. Very stop loss buyer is the purchases of those who are selling here, are selling and placing purchases here. What's the big player waiting for up there? Sell. But how is he going to sell if there is no buyer now with the stop loss position here? Oh, which is the liquidity pool. There is purchase to buy the contracts of the big players. So what do they do with the sardines? Executes, throws the price up, gives the stop loss all over the world. The market suddenly turned. You can do this test, this study. On all the assets in the world, it works the same way, and here is the proof for you. The proof is here. Clearly what happened, they captured. There was a lot of liquidity underneath that fund. Those who bought here, put a stop here, perhaps even got stuck at this price level. Who bought the toy stop again here? So let's make the right colors. Shopping. Lots of shopping, lots of shopping. Now where is the stop loss of these buyers? So down here, or the worst is positioned there at the last bottom. This is Sardine's worst nightmare. So what do great playlists do? It throws the market up, captures those who are selling there, also captured the stop loss on the guy's side, plays with market force down to come. Capturing liquidity, I say that this is everyone's mate, Sheik, or is it Pac-Man, right? He's been eating everyone, and then the market turns around out of nowhere, and he gains strength. Why? There was liquidity capture. So from that moment on, when you see a well-designed structure with a very clear background, you will no longer buy from those first backgrounds, okay? You will wait for everyone to make mistakes. Make mistakes, that's A. The balcony, the big players want everyone to make mistakes here, will induce a lot of people to buy. Let's position the stop loss there, okay? So player comes, executes these purchases, throws the market up to execute the purchases, then comes and does the Rappa. The Sheikh kills, Pac-Man comes and eats the little stop orders, shop everyone, and the market turns. When the market turns, what are you going to do? It will sell at that top. It will not sell at that top. It will not sell at the main top that you have there. Remember, these tops are for induction. They are only for induction. This is price manipulation. You will wait for everyone to be busted, and from that level, when you identify that there has been liquidity capture, you will find a reason to sell. And so it works every day within our market manipulation trade system. Did you like this video? If this video helped you, leave a comment here. What did you think of this technique? And of course, subscribe to the channel, activate the bell, and leave a like on this video. Let's go. That's just the beginning.